Policy limits. How much? How much can I pay into a high cash value life insurance policy in any given year? How much death benefit can I have? How much death benefit do I want to have? But how much can I have? How much money do I want to pay into a policy? But how much will I be restricted to paying in? These are good questions to consider because I may have a desire to pay a certain amount of money into a life insurance policy. However, once I discover the limits, I may or may not be able to pay that much into a policy. So we're going to cover policy limits here, specifically around how much I can pay into a policy and then how much death benefit I can be approved for. And you're going to see kind of how the two tie together. So around the death benefit, why this is important. So if death benefit is a concern, or if you are one that states, hey, Steve, I don't really care about the death benefit. My goal is the cash value. How do I optimize that? I don't care about the insurance. The death benefit still has importance, and the reason why is my age and death benefit have a direct relationship to my MEC limit on a life insurance policy. So often we will ask, or I will ask the question, how much do you want the ability to pay into a policy on any given year? Not commit to, not get a bill for, but how much do I want the ability to pay into a policy on any given year? And what I've got to be aware of, two limits, the insurance company limits, and then also the MEC limit. And when I get to a point when I'm ready to fund, how do we set it up? Well, let's take a quick look here. This might look familiar. We've got our policy design chart. So we've touched on this several times. When I pay money into a policy, where can it go? Premium or the PUA component? And we've covered several times the relationship of these two components. The premium piece, any money I pay in here in respect to my cash value, especially in the first and second year, often nothing shows up in cash. The reason why is the insurance company will overcharge me for the death benefit right off the bat. Good to be aware of this. Now, as time passes, premium dollars do capitalize the life insurance policy, as I will see cash value accrue and I'll begin to yield dividends and interest on that. When I say dividends and interest, I'm referring to the surplus and then also the guaranteed rate. Whereas money I pay into the PUA component shows up in cash value. That's money I have access to almost immediately and begins to yield the guaranteed rate plus any dividends. Now the term PUA stands for paid up additions, meaning it will buy me paid up additional life insurance. Paid up because I do not get a recurring bill for that. I can design it to be very flexible, unlike the premium piece. So often we'll hear, hey Steve, again, death benefit, I'm good here. Maybe I'm self-insured. Maybe I don't have any beneficiaries. I'm a single individual. I don't really care about the insurance, but hey, I am interested in that cash value. So limits is what I want to be aware of, because when we hear, how do I put nothing into the premium and everything into the PUA component, we can't go quite that aggressive for two reasons. We have the insurance company limits. I said two reasons, two limitations, I should rephrase. The insurance company limits, which we've touched on this in the past, all companies have different limitations here. We often refer to this 10/90 split. And where I get that from is a lot of the larger mutual companies that we prefer have right around that threshold. Some smaller companies do have lower limits, meaning I can go lower than 10%. If it's something I'm interested in, you can certainly reach out to us. We can give you info on different companies. It's interesting stuff if I'm looking at how to optimize a policy. But I've got to be aware of this, the insurance company limitations. The second limitation is the IRS, and that has to do with my MEC limit, which is the total amount of money I can pay into a life insurance policy per year and still have it classified as life insurance, not a modified endowment contract, which I've got to deal with taxes, potential penalties. It's ugly. I don't want that. So what many are not aware of is we can really set that MEC limit wherever we want. Within some limitations, you'll find that it has a direct relationship to my age, death benefit, and gender, if we're going to be technical here. So when we go back to the question, how much do you want the ability to pay into a policy on any given year? Ability, not commitment, is if a company has a minimum 10% premium, meaning if I set my minimum premium at $2,000 per year, the company may permit me to make a total payment of $20,000 per year, perhaps. 10%, 2,000, 90%, up to another 18,000, for a total of $20,000. So literally, this means I can commit to close to $2,000 per year. It might come out to $2,500 or $3,000 because I will have to utilize a term rider in this example, but I can commit to a lower or minimal amount that does not feel like a burden and then have the ability to add up to 20. Same thing if my premium's $20,000 and I can go up to $200,000. A lot of times we can design a policy in that manner or a similar manner. Now, what would restrict one from actually moving forward with that type of setup? What can prevent me that's outside of my control as the policyholder? Well, limits that are enforced by the insurance company. So if I'm ready to fund a policy, I've got to be aware of a couple things. So we've got an example of a 50-year-old male, and at age 50 for a male, it's kind of even numbers. And what I mean when I say that is a $1 million death benefit will obtain a $50,000 MEC limit, just over $50,000. $2 million gives me $100,000 in MEC space or a MEC limit. $3 million gives me $150,000 in MEC space at age 50. Every age is different, but there's a specific reason I used age 50. It's very easy to track. What I've got to be aware of are the insurance company limits. So this is an example from one insurance company, and I would not take this to the bank and say all insurance companies abide by these limits, because they don't. You will find many companies have different income ratios, income limitations. Some companies have as high as a 35x multiplier and then break it up every 5 years. This is meant to be a general sample in that respect. But what it shows is if I am opening a policy between ages 18 and 40, say I am a 30-year-old male and I make $100,000 per year in income, that means that the insurance company will approve me for a maximum death benefit of $3 million. And if I am a single 30-year-old male, with no beneficiaries, and I say I don't care about the death benefit, how much MEC space does that $3 million give me? How much do I have the ability to pay into a policy then and still have it classified as life insurance, not a modified endowment contract? That's where the limits come into place. It's good to be aware of that, right? If I want to have a $5 million death benefit because it gives me a $150,000 MEC limit at age 30 or something along those lines, I won't qualify for it. Or I have to justify to the insurance company why I am doing that. Do I have other assets, liabilities, inheritance coming into play, whatever it might be, which all come into play. A lot of times you can work with an insurance company if you have other assets, liabilities, inheritances coming in, business interest. There are means to increase the total death benefit I can obtain. However, that has to be disclosed all up front to an insurance company. The more they have up front, the better offer they can make in terms of a total death benefit, which is important to me, the consumer, because now I know death benefit, MEC limit, how much can I qualify for? So if I'm age 50, 20x multiplier. So say a 50-year-old male has 500 grand in his bank account because he sold a piece of real estate. That's common. Say he makes $100,000 per year. I'm going to put this over here actually. At age 50, With this insurance company, for example, at 100K per year, he would qualify for 20x his income, which would be what? $2 million. Therefore, he can make a total payment of 100K per year. If he has a lump sum of 500,000 in his bank account and he says, hey, I want to pay in 250 in the first 2 years or 200, it would be very difficult to do that. Now you can go to the company and say, hey, I've got this lump sum of cash. Maybe I have other assets and such. Can I obtain additional coverage? Sometimes, depends on the company, the underwriter, our goals and such. There's a lot more to it, which we're not going to go into all the details in this video. Point being, it is good to be aware of these limits. And again, all companies have different limitations. And when it gets interesting is, say I'm 65, say I'm 66 or older. Maybe I'm not working. My income is all retirement, real estate income, pensions, 401k, disbursements, whatever it might be. But let's say I have a very large pool of money, retirement assets built up. I accumulated a large bucket of cash over time. Maybe I have a $10 million or a $30 million net worth and I say, hey, I've got 20 million liquid here, or I've got 20 million in qualified accounts. When I die, I'm going to take a huge hit, or my estate will, as far as leaving an inheritance. Well, that would be a case where we can somewhat approach the company and the underwriter and say, hey, here's my income, but I've got a large amount of money. It doesn't have to be a huge amount of money either. It's all relative to my situation, but I have the means to fund a policy and I'm trying to replace my assets through life insurance proceeds or a portion of them, because when it comes to the death benefit and legacy planning, life insurance is an extremely effective means to leave money. It has always passed income tax free. If I have a large estate, often it makes sense to use some type of trust and consult with an attorney on that. However, it is a very, very effective way to leave a legacy. You'll see companies and billionaires, wealthy families, they've done it forever, and there's good reason behind it. So it does have some play with the death benefit planning as well. But in a case like this, I mean, the individuals we've worked with, that maybe it's a 70-year-old individual that says, hey, I want to move several $100,000 per year into a policy of money just sitting there, but I still want to see that cash value. I don't want to give it up and have the death benefit. You can do that. And that has to do with the policy design. We go back to the drawing board, show them how to minimize the underlying insurance premium, set the MEC limit at the appropriate figure, set the death benefit at the amount they want to leave. A lot of information I'm giving you here. Point being, we'll customize the policy in order to optimize cash value, since we always talk about that, and still leave a legacy if that's the goal. But this stuff here, good to be aware of, is my main point. And we'll always provide the information. We'll work with you if you're working with us. If you're an agent and you would like more of the nitty-gritty details as far as the different companies and such, feel free to reach out to us or check out our agent training program. We go into every single detail imaginable in there, and we continue to improve that. But as always, I hope that this helps. Reach out with any questions, and we will talk to you soon. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.